Not a lot of countries are experiencing a downfall as dramatic as the United Kingdom. The country that once ruled over the largest empire in history is now fading into irrelevance. In 2007, the country had a slightly higher GDP per capita than the United States. Now it only has 60% of America's figure, with a GDP per capita of $46,000 compared to $76,000 in the US. The UK is actually poorer than Mississippi, the poorest state in the US, with a GDP per capita of around $48,000. And if current trends continue, Poland could overtake the UK in GDP per capita within a decade. This doesn't come out of nowhere. Adjusted for inflation, there has been virtually no economic growth in the UK since 2007. In part, this is due to a sudden halt in productivity growth. If the productivity trend from before 2007 had continued, the UK's economy would have been 25% bigger than it is now. But there's a lack of innovation and investment, and the country is falling behind its peers. This has also had an effect on real wages, meaning wages adjusted for inflation. Brits are earning a similar amount now as back in 2008, meaning purchasing power has stalled. Before this period, real wages used to grow 33% a decade. Publicly traded companies in the UK also had a terrible past 2 decades. We can see this in the FTSE Stock Index, tracking the country's 100 biggest stocks. At the time of writing this video, it has only grown about 25% since the beginning of the century. For comparison, the American S&P 500 index has grown over 250% during the same time period, or around, 10 times as much. But all of these things leave us questioning why the country is struggling so much, or as Britons would say, in a bit of a pickle. Is it government policy, international competition, or other fundamentals that are causing this decline? In this video, we'll take a close look at the UK's economy, and we'll go over the possible consequences that this downfall might have.
And you can see the UK, the higher these bars are, the more unequal. The UK is much more unequal than many other countries around Europe.
With no plans to improve its resilience, Britain is heading for systems collapse. Everyone's on strike, the NHS is broken, and we're skint. Where do we go from here?
The impact of lockdowns during the pandemic, according to the Centre for Social Justice, which produced the report, is that life is going backwards for many, with staggeringly high numbers experiencing mental health conditions.
As mentioned earlier, things started going downhill for the UK from 2008. So, to truly understand the roots of the problem, we have to look back to the Great Financial Crisis. 2008 saw the worst recession in the UK since World War II, only surpassed by the COVID shock in 2020. Because the country has a large financial sector, the impact of the crisis was huge. Following the collapse of the Lehman Brothers and the issues with subprime mortgages in the US, the global financial market was in shambles. Many banks globally, including the ones in the UK, faced liquidity issues. They couldn't get their customers' cash back because they were holding bad loans. The British Northern Rock Bank experienced these problems, which led to the first bank run in the UK in 150 years. There were also financial issues with the HBOS Bank, the Royal Bank of Scotland, and the Bradford and Bingley Bank. The government in London, as well as the country's central bank, the Bank of England, stepped in to provide emergency loans. This was to restore confidence and to prevent the crisis from spreading even further. Still, these problems in the financial sector had long-lasting effects. Because the government spent a lot of money on bailing out banks and fighting the crisis, government debt soared. The problems with government finances led to a decade of austerity, which we'll discuss later. The 2008 crisis also had an impact on the rest of the economy. Because of reduced lending and public trust, spending declined, and the country's GDP fell by 6%. But this recession was very different from others, which we can see on this chart comparing the post-recession recoveries. Most of the time, growth is back on track 3 or 4 years after the crisis starts. But in 2008, the crisis had caused a stagnation of about a decade. What makes this even worse is that 12 years later, the country got hit by another economic disaster. Or we should say 2. The COVID pandemic caused a record GDP decline of 11% in 2020, the worst economic performance since 1709. It was a steeper decline than any other major economy. Like many other governments, London turned to inflationary financing to prevent things from going from bad to worse. Basically, it was keeping the economy alive with government debt. This debt went from 86% of GDP to 105% of GDP in a year, up about 20 percentage points. The country's central bank, the Bank of England, also helped with this. Through quantitative easing, it pumped nearly £500 billion in the economy in 2020 and 2021. This worked out in the first year, as most of the initial damage was already undone by 2021. But giving a lot of stimulus to the economy comes with a price, as it can create inflation later on. This process, also called the transmission process, can take 1 or 2 years to complete. As the UK was gearing up for a post-COVID inflation wave, it was hit by another crisis. When Russia invaded Ukraine in 2022, energy prices soared due to sanctions. At its peak, electricity in the UK became nearly 10 times as expensive. The government in London tried to help consumers with support packages, but that didn't really do much to prevent inflation. Combined with the effects of COVID, there was a massive cost of living crisis. In October of 2022, inflation reached a peak of 11.1%, a 40-year high. The Bank of England had to increase interest rates to slow down the economy and ease inflation. Think of high interest rates like hitting the brakes, where people lend less money and buy less goods. For example, it becomes more expensive to finance a car with a loan. But because purchasing power had just been slashed after the cost of living crisis, the spending decline got even worse. The same car that had just gotten harder to finance was also way more expensive due to inflation. And this didn't just happen with cars, but throughout the entire economy. In the final half of 2023, the UK was once again in a recession. Surprisingly, it was the only G7 nation to be in decline, although the other major economies experienced stagnation. GDP is once again recovering in 2024, but the crises of 2020 and 2022 hurt the country permanently. Economists predict that it caused a long-term loss of 3% of GDP. Still, this whole story doesn't seem to differ much from the rest of the world. Most countries experienced the same problems in 2008, 2020, and 2022. But the UK suffered way more from these crises than others did, which leads to an interesting question. Why is Britain so much worse off than its peers? Well, to understand this, we have to look at the country's economic fundamentals. As we've already discussed, productivity has stalled ever since 2007. This means that the country isn't making its people and resources more effective over time. Stagnating productivity goes hand in hand with low investment. Investment into things like infrastructure and research and development is usually what drives productivity growth. Unsurprisingly, the UK consistently ranks as the lowest of the G7 and among the lowest of the 37 developed economies in terms of investment. One of the key metrics in this regard is gross fixed capital formation, which measures how much money is invested rather than consumed. On this chart, we can see that ever since the late 1990s, the UK has been lagging behind its peers, France and the United States. The private sector is one of the issues here, as the UK has the lowest private sector investment in the G7. This has only been a problem for the last 2 decades. Back in 1996, it was actually second in private investment among G7 countries. If we dig even deeper, we can find the root cause for this decline. Before 2008, there was a few highly productive companies that were causing most of the productivity growth. The top 5% had growth in the double digits. These businesses included the UK's successful finance sector. The UK is the largest net exporter of financial services globally, with a £92 billion surplus in the financial sector in 2022. London is competing with New York as the world's financial capital. The point is, though, that the rest of the economy didn't enjoy similar growth. The bottom 40% of companies were already stagnating or even declining in productivity before 2008. In economics, this is called a two-speed economy, where some parts are growing but other parts are stagnating or even declining. The two-speed problem is way worse in the UK than in other countries, such as France or Germany. As you can see on this chart, Britain has more low-productivity companies on the left and more high-productivity companies on the right. We can also see these divisions at a regional level. Some well-off parts of London have double or triple the income of southern Scotland or West Wales. Within London, there's also a nearly triple income difference between the poorest and the wealthiest districts. This is a symptom of wider problems. It means that some parts of the country are just way more productive than other parts. The reason is that investment is concentrated in just a few areas. London is attracting most of the foreign direct investment, with around 40 to 50% of the money going there. No wonder that London has outgrown all other regions by a long stretch. But following the crisis in 2008, the cracks begin to show. The businesses in the financial sector slowed down. This revealed the fact that most of the economy already had serious productivity and investment issues beforehand. So, a big issue is that the UK's workers are not productive enough, at least outside of London. But another fundamental problem is that the country doesn't have enough workers to begin with. The UK's workforce is collapsing, which undoubtedly plays a role in the economic decline. Britain's birth rates have been below the replacement level since 1973, largely following trends in other developed nations like the US or France. It sits at 1.56 births per woman right now, which would translate into every generation being more than 20% smaller. Still, the population has continued to grow and is expected to grow until 2050. In part, this is because of the aging population. Because people simply get older, the growth in the elderly population makes up for the lower births. But that's not solving the economic problems, since the elderly population doesn't have much economic output. In about 25 years, a quarter of UK citizens will be over 65, which will have a major impact on public finances. While spending on healthcare and Social Security only increases, income and tax revenues only goes down as more people retire. However, the aging problems in the UK aren't that bad, relatively speaking. The country's population pyramid is actually pretty healthy, at least compared to nations like Italy. Various European countries have new generations 60% smaller than the boomer generation, which is something the UK doesn't have to worry about. This is because birth rates are slightly better, but also due to high levels of immigration. For 30 years now, Britain has been consistently taking in more people than went out of the country. Net immigration has increased enormously, going from 100,000 yearly to nearly 750,000 in 2022. But there's one problem with immigration. It's hard to get high-skilled workers into the country. In fact, it's hard to keep high-skilled workers in the UK. While 1.2 million people migrated to the country in 2023, more than 500,000 moved out of the UK during the same year. This is causing a weird brain drain situation. It's attracting people from lower developed countries, while it's losing people to higher developed economies. Because other nations offer better salaries, the more productive workers in the UK naturally move out. Now, one area of the economy seems to be exempt from these problems: the finance industry. The banks and insurers in London still offer good salaries, and their workers are very productive, as they're the only one winning in the UK's two-speed economy. But what if the finance industry is actually part of the problem? You see, the country's capital markets are broken. This is pretty obvious. The country with an enormous financial sector is, ironically, the one struggling with underinvestment. It's clear that the financial activities in London aren't really connected with the rest of the country. In total, the UK's financial institutions have $33 trillion in assets, which basically includes all the investments and loans on their balance sheets. There is no way that the UK economy of $3 trillion can absorb all of that money. With financial assets 11 times GDP, there's simply not enough demand for loans, and there are not enough businesses to invest in. But that's the point. London's financial sector is mostly doing business internationally. For comparison, the US financial sector has assets 5 times the GDP, which is more in line with domestic demands for loans and investment. While this outsized financial sector had its benefits for London, it leads to a broken system for the rest of the country. The 2008 crisis hit the UK way harder than other countries, due to the overdependence on finance. And there are also other structural problems. The pound is arguably overvalued. because of the huge demand in the financial system. This makes other industries uncompetitive internationally. With an overvalued currency, exports are more expensive and imports are cheaper. You could argue that the rise of the financial sector came at the expense of the UK's manufacturing industry. In 1900, Britain had the biggest industrial output in the world, as it was the first country to industrialize. But more than 100 years later, there's nothing left of this. In the area of total manufacturing output, it's only 11th in the world. Over the last 30 years in particular, the industrial decline has gotten very bad. The value added from manufacturing was halved, from 16% of GDP to 8% of GDP. All of the simple manufacturing has gone to countries like China, while high-end manufacturing has been more successful in Germany and the US. The effect of this has been clear. The UK now has an economy heavily reliant on services, with 81% of GDP falling in this category. In the nation's trade position, we can also see this trend. It has a growing trade surplus in services and a growing trade deficit in goods. Overall, Britain's total trade balance is at a deficit, which shows the true cost of an overvalued currency. Now, we could go on for hours talking about all the other economic factors playing into this, but you get the point. There's something fundamentally wrong with the UK's economic model. Understandably, this is having an impact on the country's politics. Voters are fed up, and there has been a huge loss of confidence in the UK's governance. Although everyone recognizes the problems by now, the different parties disagree on the correct policies to fight them. A watershed moment was the Brexit vote in 2016. It decided whether the country should leave the European Union, and it was a very close call. 51.9% of voters wanted to leave, while 48.1% wanted to stay. Brexit was undoubtedly a trade-off. The benefits included freedom from the EU in economic policymaking and more protection for domestic industries. But critics of Brexit pointed out that the UK relies heavily on free trade with the EU. Like many economists predicted, Brexit had a negative effect both in the short and long term. After COVID, the UK had a worse recession and recovery than countries who remained in the EU. In part, this was caused by the downstream effects of Brexit. Companies who used to do business with the EU now have higher costs in their supply chains because of trade barriers. For London's beloved financial industry, there were also some bad consequences. Over 440 financial firms have moved jobs out of the UK, and banks have transferred nearly $1.4 trillion to European accounts. Ireland, France, Luxembourg, and Germany have welcomed this with open arms. Still, staying in the EU would have had some bad effects economically. The UK had a growing trade deficit with the rest of the Union, which was the biggest contributor to the overall trade deficit. In 1999, the UK had a deficit with the EU of around £10 billion. In 2019, just 20 years later, this had already increased to nearly £100 billion. The reasons for this were fundamental. The UK was losing the competition with the highly productive economies in Western Europe and the low-wage economies in Eastern Europe. So many believed it was better not to compete with these countries in a free trade zone. But after Brexit got implemented in 2020, things only went downhill in British politics. Former Prime Minister Boris Johnson resigned because of the Partygate scandal. It became known to the public that he broke his own COVID rules during the lockdowns. Near the end of his term, about 2/3 of the UK's population disapproved of him. This also has an economic impact, as political instability isn't good for PR, and it didn't get a whole lot better afterwards. Boris Johnson was followed by Liz Truss. After she stepped down, she was replaced by the current Prime Minister Rishi Sunak. He doesn't enjoy good public support, with 70% of Brits having an unfavorable view of him. In part, this is because he carries the 14-year-long Conservative legacy with him, defined by economic stagnation. Recently, he called a new election to take place on the 4th of July. This is a huge bet, since his rival Labour candidate is ahead 30 percentage points at the time of writing this video. Some estimate Rishi Sunak's chances of winning are just 1%. Still, it remains to be seen if a potential Labour government will do much better for the economy. It can start off with a blank slate, but it will still face a bunch of impossible problems. One of these issues has to do with public finances. Public investment by the national and local governments is below average compared to the UK's peers. This fits into the economically conservative policies of the Tory governments, defined by tons of austerity measures. There's one reason for this, namely high public debt. Authorities have a debt reaching nearly 100% of GDP. In just 30 years, the debt relative to GDP increased nearly five-fold, as it was just 20% in 1990. During the fiscal year of 2022 to 2023, interest payments on public debts increased to a record £111 billion. With a working population of 33 million, that's already more than £3,000 per worker. Interest payments have even exceeded the UK's spending on its education system. When a country spends more on debts than on education, that should tell you enough about where it's headed. This will only get worse if the current high interest rates continue, because debt will become more expensive to maintain. These financial problems will force the government in London to make some tough decisions. It can either decrease spending or increase tax rates. But there isn't much room to do both of these things. The country's tax burden is set to hit an 80-year high by the end of the decade, jumping to an average of 37%. For the highest-earning Brits, income tax is already at 45%. Increasing this even further will meet a lot of resistance. However, the austerity measures of the Conservative government are also nearing their limit. 8 out of 10 UK citizens think that public services have gotten worse over the last 5 years. The low budgets are having a real effect on the quality of education, healthcare, and the justice system. Recently, the government published a list of 147 state schools whose buildings are at a risk of collapse. The country's National Health Service has a backlog of about 7.7 million people waiting for treatment. That's 1 in 7 people in the entire country not being able to receive the care they need. The justice system is in a similarly dire situation. Magistrates' courts have more than 300,000 criminal cases outstanding. The Crown Courts, who are dealing with more serious offenses, are 65,000 cases behind. In short, Britain's public services are crumbling, which is the result of a decade of cost-cutting. The potential new Labour government will try to put an end to this by increasing spending. But that's also not a viable long-term solution. It will have to increase taxes even further or put on even more debt, which can lead to more problems down the road. Another hard-to-solve issue for British politicians is the country's trade position. In 2023, the country imported £33 billion more in goods and services than it exported. Britain has had a trade deficit every year since 1998, except for 2020. We've already covered how this was a big reason for leaving the EU. But in order to keep Britain's trade flowing, the nation has tried to shift its economic alliances. With other countries, it might be able to get more favorable trade deals. The one country where it set most of its hopes on was the United States. Brexit supporters said that leaving the EU would allow for more trade with the US. Negotiations for a US-UK trade deal started in 2020, but have stalled ever since. Last year, the two countries signed the Atlantic Declaration, which improves bilateral trade but is far from a free trade agreement. The issue is that the US doesn't have the same interests as the UK when it comes to the partnership. Both sides of the aisle in Washington want to protect domestic industries, meaning they don't want to open up the American market to foreign goods and services. On a state level, however, there are more opportunities. The UK has signed trade pacts with 8 US states, including the second and third most populous states, Texas and Florida. In total, the UK has already accessed a quarter of the US GDP. Talks with other states like California and Illinois are ongoing. There are also new trade deals with other countries. Since Brexit, the UK has signed pacts with Canada, Mexico, Israel, Switzerland, South Korea, and Turkey. These agreements largely replicate the EU's agreements with these countries. But the UK also tries to use its independence from the EU to improve economic ties with new countries. In 2021, it signed a free trade agreement with Australia, and in 2022, it did the same with New Zealand. There have been years of negotiations with India, although there are no results as of yet. The two countries have similar-sized economies, and they could both benefit from mutual trade. Still, a possible free trade deal between the UK and India have been suspended until both have had elections. To sum it all up, Britain is facing a lot of headwinds. If the current economic situation continues, the effects will be dramatic. The nation that used to have an empire where the sun doesn't set could lose all of its significance on the world stage. A Chinese ambassador made it very clear during an interview. When asked if China and the UK were competitors, he simply explained that Britain is not a competitor nor an adversary. Quote unquote, the British government should not overestimate its impact on the global scene and view Britain as a rival of China. Oh, that's a rude awakening.